since the tail end of the global financial
Okay, good morning again and welcome to our second session entitled The Multiple Uncertainties and Volatilities in the Global Economy, Rising Risk of Instability. We are this morning a very powerful group of speakers. This morning we set the stage about where we are heading in the global economy, and we look also at the need for diversification for countries in Central Asia. We can move away from oil. We see also that the global economy is still on a path of slow growth. We have low interest rates, and we have now China new normal. So all these multiple uncertainties might be the reason why it's been very difficult to have a pickup of growth, a pickup of investment. And we have this thesis that has been around, floated by a very eminent economist, Larry Summers, about secular stagnations. On the other side, you have other economists who are talking about saving glut. So we want here to look at why we have low growth, why we have low interest rate, what is going to happen with normalization of US interest rate, why China new normal has major implications to the rest of the world, that China is now also providing spillovers to the rest of the world, despite having not a full open capital account. We are also uncertainties in Europe, in the EU, where we have now concern and rising risk, maybe as a capacity or the potential that the UK will leave the European Union. We have now 40% of the global economy under negative interest rate. So what does it mean for the global economy? So we have with us a powerful group of speakers, and we are very privileged to have the Minister of National Economy, Mr. Kwadin Bishimbayev, who has been nominated recently. And thank you very much for joining with us. You will be our first speaker, followed by Jacob Frenkel, Chairman of JP Morgan Chase International and the former Governor of the Bank of Israel and Board of Trustees of G30. Mr. Christian Noyer, former Governor of the Bank of France, who used to be the Vice President of the European Central Bank and the Chairman of the Board of the BIS. Last but not least, Athanasios Orphanides, who is a Professor of Global Economics at MIT and the former Governor of the Bank at Cyprus. So we have a mix of central bankers who have very good knowledge about the set of monetary policy, a Minister of Economy who can clearly showcase what Kazakhstan can do now in a context of oil going down, diversifications, and how, as a managing director of IMF yesterday mentioned in her speech, how Central Asia and Kazakhstan can become an open artery for this One Belt, One Road initiative driven by China. So, Minister, I know you have a very busy agenda. Why don't I give you the floor for 8 minutes, and I will follow with the other speakers. Minister, please.
Thank you very much. For me, it's a great honor to take part in this session. The questions that you are raising during these sessions are very interesting for us and for economic development of Kazakhstan are very important. At the same time, I'd like to give my colleagues here at the panel a little bit of an overview of what is happening and what trends are affecting Kazakh economy this year and what was happening last year. As it was already rightly mentioned, our largest trading partners, our largest economic partners are experiencing difficulties. Russia and China are both slowing down. This happening for different reasons. In case of Russia, we all understand that there are geopolitical and economic issues, sanctions. In case of China, China is trying to rebuild its internal economic growth model, orienting it more for consumption rather than investment now, internal consumption. And we see that major exporting sectors of Kazakh economy has been suffering from that, both in terms of price. This, of course, relates to oil and metals. At the same time, it also affects the demand side, and meaning that the quantity of demand and the quantity of demand for Kazakh exporting goods, of course, is being decreased. So in this situation, we saw the effects of these two trends coming through various channels. First, of course, it's currency. We see now currency devalue significantly last year. We also see the effects of these macro trends or trends that are happening in the region in our budget. We see the decrease in budget revenues. We see the decrease coming from taxes and also from the revenues that are filling our national oil fund. So this kind of requires us to formulate, it kind of builds one political question or policy issue for us, whether we should turn and use our funds and resources to stimulate the economy in the short term. At the same time, the question is whether we should press for long-term strategic goals and restructure our business model that was based on exporting. Whether the current situation is long-term, and we will see the depressed prices for export goods of Kazakhstan for a longer period, or is it just a short-term volatility? But one thing is very clear for us, that everything has become much more volatile than it used to be, and we have to account for that. So in this situation, basically, the government of Kazakhstan has devised a twofold policy. First is short-term policies to stimulate aggregate demand in the economy through investments in infrastructure, and investments in infrastructure that will not just create short-term jobs, but also at the same time kind of open up the market and expand the opportunities that exist in our economy. This relates to the project of one Silk Road, one economic belt. Kazakhstan is actively participating and cooperating in that sense with China. We are modernizing and investing heavily in our transport infrastructure. And we already see the results. The projects that have been completed in previous years connecting Kazakhstan to Iran, to Middle East, are now yielding first results. We see that the transit from China, from Central Asia to Middle East, from Russia to Middle East is growing, and we see that the revenues from transit are probably going to be the next growth area for Kazakhstan. It also creates jobs, and jobs at the investment phase, and jobs also, stable jobs at the phase of actually operating this infrastructure that is being established. We're also concentrating a lot on housing as a short-term response, because it also stimulates aggregate demand inside of the economy. The government has announced a vast affordable housing program last year. This year it's being funded on a much higher levels than it used to be funded before, and we see that overall we've been able to kind of stimulate the growth in those sectors. In construction, civil construction, industrial construction, we see the growth this year in first quarter already more than 6%. And it was one of the main drivers that took our economy into positive side last year in 2015. So these are our short-term measures. If we give an account for what is the amount of support that government is providing to economy, it amounts to about 1.8 trillion tenge, or around $6 billion, which account for approximately 5% of GDP. And this is planned all for the year of 2016. This allows us to say that probably the results of the year will be positive in terms of economic growth. Initial projections were very conservative, 0.5, and the price of oil that we budgeted in our forecast was around $30 per barrel. We see that today price is somewhere around 50, not crossing over 50, but very close to it. And we hope it will stay the same. It, of course, will give additional lever to our economy to grow and be more in a positive side, more than we have forecasted. But we are very cautious about our forecast and kind of staying with the current level. These are short-term measures and short-term results that we're expecting, so employment and positive economic growth. Talking about changing business model in Kazakhstan, we at the government have devised what we call new structural economic policy. And the pillars of this policy, of course, is there are stages by 2020 what we have to achieve, and by 2025. The first and foremost important task is to improve efficiency and productivity, which the government plans to do through privatization. By direct and indirect accounts, government today participates in the economy in amount somewhat of 70% of GDP. So we want to drop that figure by 2025 to 15%. This will require us to privatize, and the plan is to privatize heavily in national companies by 2020. Secondly, we want more return for investments from the budget, and this requires us to utilize more innovative instruments, innovative for Kazakhstan or new for Kazakhstan, such as PPP, and trying to bring private knowledge, private technology into the areas that have traditionally been thought of as areas where only government could, invest or operate, such as social side of our budgetary expenses, education, medical care. These are all the areas that have been where the government owns 95% of the assets. And we want to, through PPP also, bring private expertise and private knowledge into that area. This will allow us to kind of take off the burden and make the government more effective in terms of concentrating on long-term rather than operational issues. And also will, in our opinion, which is supported by many other experts around the world, bring efficiencies that usually comes with private participation in these sectors. So privatization being one. Second, we want to stay in line with all the new trends that are happening in the world. Today in the morning we had a session on industrialization 4.0. So digital economy, introducing new technologies into traditional areas where also they have never been used, also allows for productivity. So industrial policy of Kazakhstan will have to, we are now in building inside of industrial policy these new trends that are happening, because these are not short-term trends, these are long-term trends, and we have to account for them. The ways and practical methods of how we're going to do it are being discussed and devised right now at this point. We also want to, of course, we understand that we have our basic industries which have their competitive advantages. They are mostly related to oil, metallurgy, agriculture. So we need to find a new way to regulate and tax them so that we take into account that the world has entered into a new cycle where the prices are different, returns in those industries are different. And if we want to stimulate additional investments in those areas, we also have to adjust our fiscal and tax policies in such a manner so that we stimulate investment, continuous investment in our core industries that are still the base of our economy. And probably I will mention just one last thing that I think is also important, is social sphere. And as I said, PPP is one part of it. It's the way how we're going to finance this area. But also content-wise, the government is keen on investing in human capital and raising the quality of education and medical care in Kazakhstan. I've been meeting several experts yesterday, and one interesting remark that is well known, but it's always important to hear about that. All of them are saying that Kazakhstan has extremely literate population, and this is our core advantage in comparison to other developing or emerging markets. So we have to utilize that, keep that advantage, and basically free up the place for people and their initiatives and business initiatives, entrepreneurial skills to come up, which means less regulation, more free space for them, more space for them to express their entrepreneurship skills. And we, as the government, have to just build and support the system that will allow them to grow, meaning that through development institutions and other forums to support and create those lifts that will allow people themselves to find the way and improve their social well-being. So this is in general, our short-term and our long-term strategy, given the trends that are happening in the world. Thank you very much.
Thank you very much, Minister. Thank you. As you see, the title of our meeting was the End of Hyperglobalisation. It seems to me that what you describe is that Kazakhstan is very committed to globalization, committed to open trade, to open investment, to open capital. So I think it's a good signal for investors.
We're a very small country,
yes,
and we have to be open. So, of course, all the global trends are affecting us a lot.
Very good. We are going to shift our discussions with the prospect of Kazakh economy to see what are the spillovers that Kazakh. If I may ask you, as you can see on our title, our session is about multiple uncertainties and rising risk in the global economy. And over the last 7 years, advanced countries have been railing mainly with monetary policy to try to get growth going in the global financial system. What are the risks that we are facing today? We talk about this morning about threat of populism. We talk about the period of low growth, low inflations. We are concerned that negative rate, interest rate will have a major impact for the banking model, for the insurance model. What are the risks? What we should be worried about? And as a former central banker, what can we do beyond monetary policy if there is something can be done, and if the fiscal policy should be entering? And we have a lack of aggregate demand in the global economy. And last but not least, if you just listen to the minister, committed to reform, committed to go to the new step of structural reform, try to diversify, to benefit for being in the middle between China, Russia. How do you describe, for a smaller country, for an open economic country, what should be the options for this country in terms also of monetary policy? Jacob.
Thank you very much. I'm delighted to be again here in Astana, and again in this event that is organized so well by the Astana Economic Forum and by you, Mark, and Maksat together. You gave me a list of questions, and I assume that I will use the next 4 hours to give the introduction of my reply. And obviously we don't have the time to do it. But I'm very fortunate that I'm following the minister, because the minister actually gave you the answers. And I believe that the strategy that the minister outlined is precisely the correct strategy for a small country like Kazakhstan, where the issue requires...
Мы установим необходимую юридическую среду в рамках финансового центра, а именно вся деятельность будет осуществляться на принципах английского права, будут созданы специальный регулятор, суды, арбитражный центр, академии и другие необходимые организации. То есть будут приложены все усилия для создания соответствующей экосистемы. Это будет притягивать квалифицированную рабочую силу. Наряду с этим в декабре прошлого года принят конституционный беспрецедентные нормы, в том числе и налоговых льгот стран и работникам органов и участников Международного финансового центра сроком на 50 лет. Кроме того, начнут действовать упрощенный валютный, визовый и трудовой режим для органов.
How did he know to start after you finished? Mr. Minister, I know you need to go, so don't be... you have 5 minutes, so let me just say that I was fascinated to see that when you described the strategy of what is needed and all the rest, you did not even mention, and properly so, again, monetary policy, etc., because the real challenge is in the real economy. The real challenge is transformation of the real economy. The real challenge is innovation, is the removal of distortions, is technology, is economic growth. And that's exactly the appropriate one. And secondly, because you need to leave, I just want to tell you that it is refreshing to hear a minister saying we need to have more integration, more trade, more globalization, because that's the only chance for an open economy. And for economy like Kazakhstan, and frankly, for most of the economies. If you go to the United States from where I flew in, you will think that you are in a different universe. All the candidates for presidency are advocating less trade, more protectionism, less integration, which is something that we should all worry about, and I just hope that after the elections, this rhetoric will give place to common sense. So now let me come now to the topic that I was asked, which is, what are the risks that we are facing now? There are risks that involve economic growth, there are risks that involve trade, there are risks that involve the implications of monetary policy, there are risks that relate to labor markets, and of course, then there is the long-term issues that are associated with demography. Let me talk about growth. If we look at growth in the world economy, we all remember the worst year that has ever happened in our generation, which is 2009, where the world stopped growing. In fact, the industrial world has shrunk. Emerging markets have saved the world, but also they suffered. What we see that since then, growth has resumed, but there are still challenges. And the challenges are that the industrial world is growing at a very mediocre rate, at around, you can see 1.8%, 2% for the US. And the emerging markets, in particular the Asian locomotives, are now slowing, especially China. You can see that China growth rate is diminishing. What it means is that when we look at the challenges of growth, we need to ask ourselves, how serious is the decline in China? Here you have the world economy in 1990 and the world economy this year as forecasted by the International Monetary Fund today. In 1990, at that time I was in the International Monetary Fund, I was the economic counselor in charge of the forecasting, and it was very obvious. If you wanted to know where the world goes, it was enough to know where the US, Europe, and Japan go, and you knew everything, because 2/3 of world output was produced there. Come to the present time, it's a very different story. Today, Europe, Japan, and the United States together produce only 37% of world output. So where did it all go? It went to the emerging markets, in particularly in Asia. So today, when China is producing 18% of world output, compared with what it was just 4% in 1990, then it does matter if China has a slowdown or not. And it is in this regard that if we look at the growth rate in China, we must recognize the fact that this decline is for real. It is not a collapse. It has started already in 2010, and each year there is a very gradual, slower growth rate. Still fast growth, but slower growth rate. So this brings me to the second issue, which is international trade. You remember that the worst year for world growth was 2009. Now, if you look at the growth of trade in the world, you see that the only year in recorded history that trade has actually declined in the world was 2009. Trade shrunk by 10.5%. It's not a coincidence. When trade shrinks, growth shrinks. When trade grows up, growth goes up. It's very important, therefore, that whatever policy one does, one should not reduce the volume of trade. In fact, there is a room for concern. If you look at the previous 10, 20 years, you see that on average, trade has expanded much more than it has expanded in the past 5 years. This means that we have a red light, and Mr. Chairman, you asked me about risks. That's a risk. Now, we are talking a lot about trade between the United States, Europe, and China. When I say we, I mean most of the policymakers that are sitting in the industrial countries. But they forget one important point. Most of the action is done in Asia. Most of the trade between China and the rest of the world is with the rest of Asia, not with the US. In fact, about double the volume of trade. This is, again, an extraordinary opportunity for Kazakhstan. And we will hear this theme about the belt, about the trading, about all the concepts that were raised, and the reason is this is where the action is. In fact, a growing proportion of the exports from the US is going to Asia, to China. A growing proportion of export from Europe is going to Asia, to China. So as a result, we should really be aware that this is the oxygen that connects the various parts of the world. Now, let me take you to the third element, which is monetary policy and debt. All over the world, and of course, we have with us a very distinguished former president, governor of the Banque de France, our very good friend, Christian Noyer. He will speak a little later. But I can tell you, if you look today at practically all the major central banks in the world, you will see something that you have never seen before. And I was governor for a full decade of the 1990s. I've never seen it before. All over the world, following the emergence of the crisis, central banks have tried to stimulate the economies by driving interest rates down to levels of close to zero. When it started, the concept was a temporary measure, because nobody believed that this is going to last so long. So in 2007, 2008, 2009, when interest rates started to fall down rapidly, people said, I'm willing to bet with you. If you asked all the central bankers at the time, in 2009 and 10 and 11, whether in 2016 we will still have close to zero rates, they would have told you unlikely, because they believe that the recovery will be more robust. But the reality is that it's not. But when interest rates get so close to zero, central banks cannot lower them anymore to stimulate the economy. So how do you inject liquidity? And this is where the unconventional monetary policies came in, and central banks all over the world were engaged in one form or another in quantitative easing, buying of securities in the market. And as a result, the balance sheets of all the central banks have expanded very significantly, again, in an unprecedented way. And this is true here for the Fed, it is true for the Bank of Japan, it is true now for the ECB. And as you look at the proportion of central banks relatively to GDP, you see again orders of magnitude that we have never seen. In the Fed and in Europe, it is about 30% of GDP, the size of the assets of the central bank. In Japan, it already went to 80%. This is an experiment that we have to hope that will end well, but there is no assurance because we have never seen this before. So that's an important point, and therefore, this is part of our risk scenario. But one of the reasons to be concerned is that if we ask ourselves, why did it all start in the year 2008? What went wrong? And there is a consensus that an element that went wrong was that all over we had excess leverage, excess debt, excess borrowing of households, of companies, of banks, of governments, excess leverage. And therefore, if you look here, for example, at the United States, you see that from 2009, there started a process of deleverage. Namely, you reduce your indebtedness, and this is the way in which you correct the initial distortion. And indeed, everything other than the governments have reduced their debt relatively to GDP. Now, this is a positive adjustment. However, when you cross the oceans, the Atlantic Ocean to Europe, the Pacific Ocean to Japan, you do not see this picture. Since I'm going to move forwards, look at this picture again. You see the deleverage process that started in 2009. In Europe, you don't see yet this deleverage. Practically, most sectors have increased their leverage. In Japan, you definitely do not see this process. Most sectors increase their leverage. So therefore, to the extent that excess leverage was the problem, we still have a long way to go. And you ask me, Mark, whether I'm concerned about it. This is the reason to be concerned. Let me move quickly forward, because time is up. I can only tell you that in recent years, especially because of the decline in the Chinese growth, with the decline in the Chinese growth, of course, commodity prices fell, and many of the emerging markets have suffered, including, of course, Kazakhstan. But not only here, Kazakhstan, Russia, Latin America, all of these exporters of commodities. And then there is the question, what should they do about it? If I promise them that this adjustment of commodity prices and the slowdown of China is a temporary phenomenon, then that's fine. We will wait another year, another two, and everything will be fine. But if I told them that this is a new reality, then it requires actions of the type that were outlined by the minister. Because I believe that the change in the growth model of China is not an episodic change, it's a permanent change. They decided to move from concentrating on exports and manufacturing to move to concentrating on domestic demand and services. This change means that they need to import less commodities from Africa, from other emerging markets, etc. That's why commodity prices fell. And I would not count on a reversal. So the only policy prescription is to make oneself less vulnerable to shocks that are focusing on a specific sector, diversification. Because the reality is, for a while, capital flows in the world moved into emerging markets, financing their growth and development. But look what happened in the last few years. Net capital outflows from emerging markets. The line is the net capital outflows. So put it in a summary, this is an issue that will not go away, unfortunately, but by the same token, monetary policy cannot solve it. It is the issues of the diversification and the real economy. I don't know, Mr. Chairman, what you want me to do, because I have two more risks and I can discuss it in another occasion, or I can just be telegraphic. 2 more minutes for 2 more risks. Risk number 1, unemployment. Wherever you go in the industrial world, you are told that unemployment is the guide. But there is one thing which is very fascinating. In the United States and in Europe, in 2010, unemployment was about the same, 10%. Since 2010, in the US, unemployment falls to 5%, and in Europe, it stays around 10%. Why? Does it mean that the United States is out of trouble? Does it mean that Europe is still in trouble? Where is it? So I just want to tell you that it's not enough to look at the unemployment rate. We need to ask, why did it go down? The reason why the US unemployment rate went down is not only because the US is out of trouble and is producing more jobs, because some of the decline in the unemployment rate in the United States is due to a decline in labor force participation. That's what the economists say. So, bottom line, There is still a way to go, and I will only say, and this is something that I'm sure Christian Noyer will say something if he is asked, that European unemployment rate is very non-monolithic. If you are in Germany, the unemployment rate is 6%. If you are in Greece or in Spain, the unemployment rate is above 20%. This is one of the reasons why the European Union and the Eurozone, more importantly, is having challenges that really require structural measures to make these differences less pronounced. And finally, I will say something about demography. If you look into the future, into the year 2030, the world will have additional 1.5 billion people. And they will be distributed according to the age profile that you can see here. So many will be between 60 and 69, so many between 50 and 59, etc. So this is the graph that tells you how the additional population is distributed according to age. But there is one thing which is very important. The world is not monolithic. All the actions are in the developing world. The industrial world is not growing at all. Out of the 1.5 billion people, only about 100 million are in the developed countries. And look how they look like. Most of the cohorts are shrinking. You must be relatively old, from 60 to 69, from 70 to 79, 80 plus, in order to see more friends around you. The population is aging. And in some countries, the population is not only aging, but also shrinking. But when you go to the developing countries, most of the 1.5 billion people are there. And the age distribution, by and large, is the way you see in the picture. Of course, not all countries are the same. China is aging, India has a beautiful distribution, Africa is getting younger, but by and large, the action in the world happens in the developing countries, and that's where the focus should be. So the focus of this discussion here in Astana about the new world, about the world economy, about the magic road, the Silk Road, and about the position that Astana plays within this structure is indeed very timely and appropriate. Thank you very much.
Thank you, Jacob, for this very good overview of the global economy and the risk. We are now going to shift and to complete what you described and ask Mr. Christian Noyer, if I may, maybe to ask him first, is the Eurozone recovering? That's one point. And as we have discussed the risk in the global economy, should we be worried about an exit of the United Kingdom to the EU? And Jacob, you mentioned unconventional monetary policy, which is now becoming conventional, no more unconventional. And the fact that we have been railing a lot in Europe, but also in the US with these new policy tools, I will not resist, but maybe ask also Christian if he can maybe answer the question is maybe the Eurozone will be ready to use helicopter money, meaning that central banks will be funding a fiscal expansion. But Christian, first, if I may ask you, the current state of the Eurozone, are we seeing a pickup, a recovery, and what will be the next phase and the rising risk in case we see the United Kingdom exiting for the EU? Christian.
Thank you very much. Maybe I would like to start by a few words to follow up on what Jacob Frankel just said about the global growth, which is so important for understanding the European economy and the Eurozone. Why weak is so growth, in my view, in this phase of the cycle, where, as Jacob rightly mentioned, we should see an accelerating phase of growth. I think there is a combination of factors which are putting weight on the different parts of the global economy. And in general, because even if the growth rate is much more satisfactory in North America or in the US, let's say, at present, than in Europe, it still remains somewhat unsatisfactory if you look, for instance, at the participation rate and the average number of housework. In other words, there is still some slack in the economy, even if it is much less than in Europe. I think we have a lagged effect of the financial crisis in the repair of the balance sheet of economic agents, much more important in Europe than in the US, as Jacob showed very clearly. We have in some countries adverse demographic evolutions that was also shown in one of the slides. And we have this famous conundrum, which is the lowering of total factor productivity that some economists, as you know, call the secular stagnation, which is something that is not clearly explained at the moment, maybe more in the statistics than in the reality, but that's really a puzzle. So in Europe, we are hit by all that. We are hit by the change of model in China, which I think is fundamentally a good thing. China needed to move from one model to the other. It could not continue with indefinitely exporting manufacturing goods, and it was confronted during the crisis, the recession in 2009, 2010, with a reality that imports were dropping suddenly from North America and Europe, and so the change is necessary, but of course it doesn't go without pain, and in turn that is hitting exports from Europe, especially in capital goods, where we had a very strong position, but not only that. It's probably transitory, but it is having a significant effect. Oil exporting countries are hit by lower prices, and there we have really a specific problem that I think warrants a couple of comments, because and this is really, I think this was really shown very well by in the previous panel. The global implication of lower oil prices is fundamentally negative, and this is a new thing because traditionally a lowering of oil prices was creating an expansionary supply shock and had positive effects on the global economy. Now it's not, we could say, a shot in the arm for the global economy, because the net effect is negative, being more negative for the in proportion of the GNP for the oil exporters than it is positive for the oil importers. There may be several reasons for that, but clearly we see that the non-linear reaction of oil exporting countries has had a higher effect on the global economy, probably via the terms of trade effect, than the windfall benefit for importers. In any case, all these, and last element is global confidence. Global confidence is weakened by a series of factors, high debt levels, high unemployment levels, by political factors, wars, terrorism, refugees. I think all this is weighing very much, in particular, on the Eurozone economy. So it is, in short, the Eurozone economy is moving in a much better shape. It accelerates slowly, but it is still recovering and still has to manage a reduction of the debt levels in some quarters, depends on the country. And one very important factor probably is that, I mean, the reason why, as was shown on one of the graphs presented by Jacob Frankel, the fact that the unemployment went down from this peak of 10% in the US, continued to go up in Europe to 11-12% before starting to go down. This is the result of the second episode of the crisis. And the second episode of the crisis that hit particularly the Eurozone was due to, was the result of imbalances that were built up during the previous decade. Imbalances in terms of divergences in unit labor costs, in productivity, in the efficiency of the various economies, excess debt in some countries, excess fragility of the financial sector in some others. And therefore, we had this crisis, the so-called sovereign debt crisis, which was, in fact, the crisis of the economies that were unbalanced, starting with Greece, expanding to others. It was eventually fixed, but we lost, of course, in the second episode of the crisis, 5 years in the recovery, 3 to 5 years. And that explains why we are now moving, but with a big gap compared to the US. Now, on the policy reactions, essentially monetary policy, all central banks, as Jacob has shown, have reacted to the crisis with extremely accommodative monetary policies, both in lowering policy rates close to zero, and that pushed not only money market rates, but also the short-term government securities into situations close to zero or even slightly negative. And they have embarked into asset purchase programs in order both to flatten the yield curve and to build a lot of excess liquidity with a view to foster credit activities. Now, two remarks on that. One is that monetary policy is a very strong instrument, but it cannot act in isolation. If other policies, like fiscal policies, have to be contractionary for a while to repair the excesses of the past, then, of course, it runs against monetary policy, and there are limits of what you can achieve alone. More importantly, if there is not enough confidence then in the future of the economies, then the firms will not invest, the consumers will not increase spending, and the recovery will be low, and the acceleration will take a lot of time. Second remark, ultra-low interest rates, are a useful tool for a certain while, but they have also drawbacks. So when they stay for very long, not only can we say the central banks do not have the power to do something more in case there is a new shock, but also it weakens the sustainability of pension systems, life insurance companies, savings activities in general are hit. And that means that we penalizing savings, paradoxically, we risk in the end to trigger an increase in the saving ratio, that is to reduce the propensity to spend both for the corporates and the households. And ultra-low interest rates also, when it lasts for long, risk weaken the banking sector. If you take, for instance, the example of negative interest rates, negative interest rates, to be fully efficient, would require that the banks impose negative interest rates to their depositors. In practice, this cannot happen. It can happen with big corporates, but it cannot happen for households and small, medium-sized enterprises. So it means that the banks have to suffer a loss because of negative interest rates. The only way they can counter the loss is if they increase their credit spreads, which would run against the objective of the central bank. Or if they cannot do it or do not do it, then they weaken the capital base and they weaken their ability to expand credit, which is also an objective of the central bank. So all this to say that ultra-low and unconventional monetary policies become much less effective over time. Now, finally, about the risks on the risk of Brexit, as you asked me to say a few words. It's difficult to assess what would be the consequences of an exit of the UK from the EU. I see mostly two kinds of risks. One is in the relatively short term, short to medium term, that is the next 2 years. An exit would mean 2 years at least of negotiations, probably not to be able to reach a lot, because when you see how long it requires to have new trade agreements, to negotiate new trade agreements, it takes much more than 2 years. But in our rules, they have 2 years to negotiate before they leave. And that means 2 years of uncertainty, not only in the UK, but in Europe, probably a boost given to nationalistic political forces, difficulties to achieve any progress in the European Union. So 2 years of big uncertainties and the risk to fragilize the economies in the UK in particular, in Europe in general. Beyond that, I think the risk is mostly for the UK. First, as I said, they would have to rebuild entirely their trade agreements. And if you look at how long it takes to negotiate a trade agreement, not only with Europe, but with the rest of the world, it takes normally 5, 7, 10 years to build a trade agreement. So most likely they would end for a significant period of time with just the WTO rules, and it could disturb significantly the trade activities and then hit really hardly the British economy. And second, there would be, in my view, a big risk for the city of London, because they would lose a significant part of the capacity to be integrated and to service the whole of Europe. The only way to keep their access, their full access for financial services would be to enter the so-called European Economic Area, like Norway, for instance, has done. But the rules for that are such that probably the pro-Brexit forces would completely refuse them. So I will stop at that. Thank you.
Thank you very much. Athanasios, Christian mentioned divergence of business cycles between the Eurozone and the US. So on your side, where the US stands today in terms of monetary policy? Are we going to go back to a path of normalization of interest rate? And are we seeing a more sustainable growth? Athanasios, please.
Thank you. Yeah, let me use this microphone so I can actually be looking at the rest of the panel. It's a pleasure to be here with such a distinguished panel, following the minister, following Jacob, following Christian, discussing these issues. And indeed, I'm going to start by pointing out that I very much agree with a remark you made at the beginning of the session this morning. There should be a question mark in the title of the session. As Jacob mentioned, globalization is not only important, but important for us to promote going forward. So I'm also among the group of those who hope that we will not end what has been so good for humanity and the global economy. But this panel is about risks, and you have asked me to comment on one in particular relating to monetary policy. But before I get there, I cannot help myself but saying that I would agree with the description Jacob had of the major risks, but I would introduce it slightly differently, saying we have what I view as a very uneasy calm at the moment. We haven't been in a crisis, really day-to-day crisis, for some time. We still have the memory of how terrible 2008, 2009 was. But since then, we have localized problems, nothing on the global scale. But it's very, very uneasy situation, which I think is very challenging for policymakers, because we still have not corrected globally the imbalances that were behind the crisis of now 8 years ago. That's an issue. Jacob showed charts, for example, suggesting that if we take the deleveraging, that has progressed somewhere in the United States, where the crisis has been managed better. But if we look at Europe, I come from Europe, I look at this all the time, it's hard not to cry when one looks at what has been going on in Europe. And this may continue for a long time. It should be troubling us that not enough additional progress has been made. But there is this one risk that I will focus a few minutes on, because I think it is important to realize. Yes, we have been coming out of an environment where growth has been disappointing. We can point to that. But at the same time, in one of the most important economies of the world, the United States, we are back to normal. We have growth that is disappointing, but look, we do not choose with monetary policies and sometimes not with fiscal policies either what long-term growth is going to be. As Christian mentioned, we have very low total factor productivity growth around the world. Productivity trends are lower, but they are what they are. And the question is, how do policies adjust to these lower prospects, and what are the risks associated with, let's say, inappropriate timing of the adjustment? I worry about this in the context of the US. In the US, the unemployment rate has dropped back to what is considered normal, 5%. Yes, some people in the US say that we should not be claiming that the US is back to normal because labor participation rates have fallen somewhat. But frankly, I recall I was at the Federal Reserve 10 years ago, and our studies back then were showing that we should expect a long-term decline in labor participation rates due to demographic reasons. So even if one were to take demographics into account, then the US is very back to normal when it comes to employment and growth. Inflation is back to normal, pretty much. Yes, inflation measured by PCE, the Fed's preferred index, it's maybe a couple of tenths lower than the Fed would like it to be. If you take CPI, Consumer Price Index, which is what most of the rest of the world would be looking at, it's actually above 2%. By most reasonable measures, the Fed has met its objectives when it comes to price stability and the real economy. And then we have this glaring problem. The stance of monetary policy is completely out of whack with what normal means. The Federal Reserve, as we know, has expanded its balance sheet tremendously, which is monetary policy accommodation, maybe 100 basis points, maybe 200, maybe 300 basis points of negative interest rates, if you wish, engineered not with interest rates, but with the accommodation. The federal funds rate is still extremely low. Interest rates, real interest rates, which is what matters, are negative, very negative, which is very, very far away from normal. The federal funds rate should have been, if one were to use historical comparisons, 200 basis points, maybe 300 basis points higher than when it currently is. And that creates some risks going forward, because as the rest of the world catches up, the US Federal Reserve is going to have to be faced with this situation of raising the federal funds rate. Of course, that's going to be fine for the US. They're back to normal. They will be defending their economy appropriately. But let us remember that because of the special status of the dollar in the US economy, whenever the Federal Reserve starts raising rates, especially when it does so more abruptly than people anticipate, which I fear may be happening over the next couple of years, there are a number of countries in the rest of the world that face difficulties. There are a number of countries whose cost of financing depend on the dollar. There are a number of countries whose capital flows may be sensitive to that. Jacob had a very interesting picture showing emerging market flows, and we have already seen recently a reversal of flows. And we've seen that reversal of flows even though the Fed has barely started its process of normalization. I think one of the major, very, very normal, usual cyclical risks is actually coming ahead for us that a number of emerging market economies are going to have to be watching for, and that is that with additional increases in the federal funds rate that I actually see ahead coming much faster than what is built in the term structure of interest rates in the US right now, we're going to be repeating the historical experience of seeing some countries face tremendous difficulties. There is not enough time to prepare for these things. And I'm going to mention something that is important for the context of Kazakhstan, since we're in Astana as well. Very important to have the appropriate framework in place. I think it's excellent that the National Bank has adopted inflation targeting. It's a very useful framework in order to respond to some of these risks, but there are other risks that will have to be tackled. There are risks associated with currency mismatches in the banking system. There are risks associated with not being thoroughly prepared to handle the currency fluctuations that are likely to be associated with the divergence we see in policy, especially with the Fed's returning to normal. So that's a major risk. I mean, we may hope that if you are in the emerging markets, and including in China, by the way, a very large one in that sense, you may hope that the Federal Reserve will not be forced to tighten too fast, but hope is not a good strategy. So if we're evaluating risks going forward, I think it would be prudent to prepare for some nasty surprises that may come with the normalization of policy in the US. Let me stop here.
very much, Athanasius. Very good. I think we have now a very, very good overview about the risk facing the global economy. I think clearly that what Jacob said at the beginning, that maybe the major risk is not just about the short-term economic outlook, about normalization of monetary policy, but maybe we are losing the consensus toward open trade, toward open investment, toward open capital. And I think with the current political uncertainties, we need to redefine how we can better promote globalizations, how we will need to discuss and to listen more to the consequences to manage globalizations. But now it's time for questions for our speakers. I'll open the floor. Please introduce yourself. We'll take a couple of questions. Go back to the panelists, please. Microphones.
My name is Peter Frankopan from Oxford University. It's a very sobering view you've all given. Is the sobering view you've given a best case scenario? If not, what is the worst case scenario?
Thank you. Let's take a couple of other questions. Jacob, you want to start?
Every scenario has a distribution around it, and realization may be worse or better. I'm intrinsically more optimistic about the state of the economy than maybe the average, in the following sense. I'm completely not impressed with the arguments about secular stagnation. There are, if you look at history, there have been so many points in time where people said, well, what else is left to do? So many innovations took place. Now we have already the railroads. Will there be something else? Now we have the electricity. Now we have already the computers, the communications, the internet, etc. And each time, the notion was, what will be the next driver? At least, if you travel around the world in some of the smaller countries, and I can tell you in Israel, you have a complete buzz of startup nations, of so many startups that are breaking frontiers. So we cannot today know and describe what are the new innovations that will come there, because if we knew they would have happened earlier. But looking at the path of history, they will be there. However, the last decade, since the crisis, has been a bad one. It has been a bad one for a different reason. Until the crisis took place, and even a little earlier, there was a consensus, which we called at the time the Washington Consensus, but leaves titles aside. There was a consensus among professionals of what does it take to be a successful economy. And the differences between those who did better and those who did not do so well was in terms of, did they implement the right thing? But what was the right thing was there was a consensus. Responsible fiscal policy, responsible monetary policy, good governance, strong financial system. You can do a list. Today, and maybe it is because of the political rhetoric, and maybe because of the fact that the crisis was so big that unemployment became so high, that so many people, especially in the center, were wiped out in a way. Maybe this caused so much skepticism and cynicism about it. So my hope is that the pendulum will come back, because we are clearly in a situation where there is no consensus yet of what does it take to do good policy. Just witness the discussion in the US. Witness the debate in the UK. You know, most professional economists will say that it is crazy to do a Brexit today. And yet, there is a big debate. But the debate is because of the political reasons rather than because of the content. In general, when you go to referenda, it is typically the case that the vote in the referendum is not about the subject that is being discussed, but rather, are you happy with the government at this point in time? Or are you, so it's really more of the more recent episodes that affected your mood rather than your analysis of the issue at stake. That's why it's so dangerous to do referendum in general. So I'm less pessimistic about it. There is new range of issues that we did not discuss here, but they are discussed in other fora, which is in the geopolitical sphere. The growth of terrorism has become a major threat to investments and trade and growth, and that's something which is of a different caliber, and economists do not deal with them directly, but that's the worst scenarios. Thank you.
Yes, if I may add a few words, although I totally share what Jacob Frankel just said. I think we were probably, the question asked was why is low so growth and what are the risks that are surrounding us. But we can definitely have a positive interpretation of what exists, and there is, of course, a best case scenario. Already Athanasios shown that in the US most has been done, and the result is really very good. Of course, there is still the way up for interest rates to follow, and therefore a few risks with them. But the real economy is broadly in good shape. In Europe, we have basically fixed the problems, and most of the problems we had that had been built during the first decade of the euro. Many structural reforms have been made, much more than in any other decade before. There has been a rebalancing. The rebalancing was painful, I would say, not only because in itself, when you repair a damaged fiscal situation, it has contractionary effects, but also because the rebalancing inside the Eurozone was done mostly by adjustments in the deficit countries more than by expansion in the surplus countries. And that's probably something that we still have to work with. But most of the fiscal repair has been done already, and today the average fiscal policy or overall fiscal policy is neutral or slightly expansionary, and therefore there is no reason that growth does not accelerate and that unemployment does not continue to fall more rapidly, even more rapidly. And we could continue. All exporters are in the process to adjust. Asian countries resist relatively well. China, I said, had to change its growth model. They had no choice. They should have done it whether or not there was a crisis, because one day they would have hit the limit of the old growth model. They could not continue to accumulate external surpluses and replace the production in other parts of the world. So they had definitely to do what they are doing now, and I think it's good for the global economy, even if there are transition costs. And more globally, I would say we have today policy frameworks that are much improved compared to past episodes of global recessions or slowdowns. And therefore, I think we have reduced the vulnerabilities from that may come from various types of shocks, including from potentially disorderly retrenchment of capital flows. If you look at fiscal policies, they are much more prudent worldwide. We have put in place in many regions macroprudential policies, and that also will help to limit currency mismatches. We have, in a number of countries, exchange rate flexibility, which can act as a shock absorber. We have buffers of foreign exchange reserves. And I could continue like that. I mean, monetary policy frameworks are much better than they used to be 10 or 20 years ago in many countries. Thank you.
Да, спасибо, господин Узан, за предоставленное слово. С интересом выслушал дискуссию и то, что говорили наши высокопоставленные эксперты. Конечно, мир сейчас, глобальная экономика находится на определенном переломном моменте. И правильно было сказано, что традиционные драйверы для роста кажутся себя исчерпавшими, новых не появилось. Мое мнение такое, что хотя момент переломный, но все-таки драматизировать ситуацию не стоит. Понятно, что развивающиеся страны, которые были очень динамичными на протяжении последних 10-15 лет, сейчас этот динамизм потеряли. Понятно, что Китай, крупнейшая экономика нашего региона, возможно, и всего мира, сейчас перестраивает свою экономическую модель, переходя от экспортоориентированного роста к ориентации на внутренний спрос, на внутреннее потребление, от мощной промышленной модели в сторону большего развития рынка услуг. Все это требует времени, и все это и называется новая экономическая реальность, к которой сейчас все развивающиеся страны пытаются адаптироваться. Мы видим, что развитые страны, они тоже не гомогенные. В некоторых адаптация к новой действительности произошла достаточно быстро, как в США. В некоторых, наверное, еще предстоит сделать много шагов, как в Европейском Союзе. Но, тем не менее, в целом мы считаем, что, наверное, вот этот год, он решающий, самый важный, самый критический. И мы надеемся все-таки, что уже в недалеком будущем и регион, и мир в целом покажут более устойчивое, более динамичное развитие. Спасибо.
Thank you, Mark. So let me say that, of course, we can come up with adverse scenario. Let me build on something that has been mentioned already. If we're doing economic analysis, we can focus on economics. Quite often, we see problems that have rather obvious economic solutions, and they're not implemented. And quite often, the reason why problems with obvious economic solutions are not implemented, solutions are not implemented, is because the political dynamics make that very hard or impossible. So in identifying bad scenario, I would focus on a case-by-case basis on those situations where politics may actually drive us to bad outcomes, even when obvious good solutions are available. Let me mention a few. Japan. Japan has been in a crisis. Right now they're going through really an incredible monetary experiment. Jacob showed the numbers. The problem is political. There needs to be a redistribution effectively of wealth between the generations, and that has not happened and is not happening. It's not clear if the government will find a solution to do this. There are other obvious solutions in Japan. One of them is demographics, but of course this runs into questions about how can you change the immigration policy of a country that would actually solve very easily all of Japan's problems if that is not politically feasible. So bad politics can create problems. Europe could have been a success story, but we've seen the animosity among governments in the euro area, the mistrust that has been created. This is what has created this situation where right now we need to be watching in a case-by-case basis what may happen with a referendum next month, or what could have happened with an election in Austria last month, or what may happen with elections in France, or so forth. The politics are actually creating immense risks for Europe going forward. I think we cannot rule out that some of the nastier scenario might materialize in Europe, simply because we still have not figured out how to resolve this bad politics. Jacob, an hour ago, started by noting out the politics in the United States. Anti-trade, anti-reasonable economics from all sides. It's really a fascinating campaign to watch, but a scary one to watch. And one cannot rule out that bad outcomes may occur simply because they're driven by bad politics at the end of the year. I mentioned one more and end with that one. China is really undergoing a fascinating transformation and a very, very important transition, a transition of liberalizing the financial sector. But of course, transitions can be risky. So we can hope that Chinese authorities will actually manage to achieve a very smooth transition that will actually be beneficial both for China and for the global economy in a major, major way. But one cannot rule out hiccups and risks whenever a transition like this materializes. So I've named a bunch of them, and if two or three of these actually turn out badly, then we're going to get a scenario for the global economy that's going to be worse than the consensus, I fear.
We have time for one or two questions. Yes, sir, please.
Thank you very much. Chingiz Shamshi from American University in Central Asia. I have a question to Jacob Frankel and Christian Noyer. There is a lot of discussions about the helicopter money policies of central banks. Some versions of helicopter money are really similar to unconventional monetary policies implemented in the aftermath of financial crisis, but other versions are more exotic. And I would like to know whether, at your point of view, these policies are probable to be implemented in the near future. Thank you.
The concept of helicopter money was designed as originally by Milton Friedman as a metaphor rather than as a policy prescription. Normally, when you inject money into the economy, normally the central bank does not give it away. It buys something and pays with the newly printed money. So it can buy treasury bills, which is a government obligations. That's what traditionally was monetary policy. It can buy securities in the market and even stocks. This is unconventional monetary policy. But normally it buys things and injects money. The concept of helicopter money came into the analysis as saying, what we want to achieve in monetary policy is to put, quote, money in the hands of people so that they can start spending it. And how can we give money to people without buying something away from them? It is by sending them checks in the mail, but if they don't have a post mailbox, let's do it helicopter money. And if you do it helicopter money, then everyone is coming to the center square of the city and trying to catch the money that comes from the helicopter. Some will catch more, some will catch less. Those that will catch more, if they tend to spend more than those who caught less, you will have an increase in spending. If those who catch more tend to save it, you will have less spending. At the end of the day, the concept of helicopter money is what will people do with the money that they get. In the 18th century, the traditional analysis of David Hume and others showed that if you just double the quantity of money in the economy, no matter from where it comes, helicopter or other ways, by and large, after a while, prices will rise by the same proportion, because by printing money, you don't produce more resources. This is why monetary policy is not viewed as producing growth. Monetary policy has to be understood as putting oil on the wheels that are moving, but the main oil on the wheels are what the minister spoke about. Structural policies, making the wheels go. This is not monetary policy that does it. Frankly, the focus on helicopter money is really misguided. It is misguided because it gives the illusion that we have a trick to accelerate growth, not in the normal way that growth is accelerating, but somehow somebody will give us more pieces of papers and this will produce more jobs. This is nonsense, and it is a very dangerous direction to focus economic policy.
Thank you. I have very little to add. I totally share what Jacob just said. I think not only in what is most of the time referred to as helicopter money would be, for instance, in Europe, absolutely not feasible. It's not in the chart of the central bank, in the treaty. You can only buy or lend against collateral and cannot throw out the money. But in substance, even more importantly, it would be absolutely useless. Would probably even not help in the very short term, because the prime is confidence and the increase in spending and reduction in the savings ratio. And this kind of artificial thing would not build any stronger growth structurally. So I think I don't know why it came out, but this is to me a ridiculous focus. Thank you.
Well, let me put it a little bit differently, in a manner that may come out as saying something different, but fundamentally I would agree with what Jacob and Christian said. The way I would put it is as follows. Helicopter money can be seen as a combination of two policies. Number one, fiscal policy. I mean, it's fiscal policy that really is how you send checks to people, and this fiscal policy has done that in a number of countries, a number of episodes. You send people fiscal resources and they spend it. That's fiscal policy. And then there is the monetary policy component, the money printing. So it's really a combination of the two. I think in analyzing this, we should analyze it as the combination of the two, and in different contexts, it would work differently. For the euro area, I would actually second what Christian said. There is a fundamental problem with combining fiscal and monetary policy done through the ECB. This is against the way in which the distinction of fiscal and monetary policy has been done in the context of the European Union overall and the euro area overall. And this is why it's really silly to be discussing helicopter money in the context of the euro area. Fundamentally, the problem is that you have multiple fiscal authorities and one monetary authority, and inside the European Union, really much of the battle that is going on is about how to split the fiscal cost of the crisis. So cannot expect the ECB to pick up the slack and solve that problem. That's what governments should solve. In other situations, let's say the United States as an example, you could consider helicopter money, but why do the combination? Why don't consider separately? Monetary policy could do its job, and the Fed has done that with quantitative easing. And then fiscal policy can do its job with a fiscal expansion. And you pretty much got, I think, in the US, what helicopter money would have produced without helicopter money by having expansionary fiscal policy and expansionary monetary policy. And I think you can get that in any other context you want in a similar manner.
Thank you for all our panelists. I think we have a very good overview of rising risk in the global economy. I will call it even political risk, as we discuss a lot of the issues of political risk. It's clear that China matters to the world today. I think we don't have a clarity how China is going to enter the global financial system. We have already have a first warning when China devalued the currency last August, and since the beginning of the year we saw all these uncertainties about China growth model and China's slowdown, how it impacted emerging markets. So the spillovers might now emanated from China. It can be positive spillovers if China is growing at a faster pace, or it can be negative spillovers. So I think we need to be more careful about international responsibilities of the major player in the global economy, and we need to think much further about what should be the rule of the game when you are going to be a more multipolar world, being less driven by one country, by a more diverse group of countries. And I think hopefully the next group of policymakers will be able to find out and to define this new rule of the game for the global financial system. I would like to extend a warm applause to all our panelists and speakers, and can join with me to thank them for coming to Astana for the Astana Economic Forum. And we will reconvene at 2:30 for the next session on emerging markets. Thank you very much.